The Australian dollar is dropping again. After showing signs of strength earlier this year, the Aussie dollar is once again struggling to hold its ground. So what exactly is happening to the Australian dollar in May 2025? Let's break it down. At the start of 2025, the Australian dollar looked promising. In January and February, it climbed close to 69 US cents, boosted by stronger commodity prices and optimism around China's economic recovery. By early March, many analysts were predicting a stable or even rising Australian dollar. But that optimism has faded. As of mid-May 2025, the Australian dollar has slipped back to around 64.5 to 65 US cents. That's a significant fall in just over a month. And there are three main reasons behind this slide. First, the United States continues to maintain high interest rates. The U.S. Federal Reserve has signaled that rate cuts are unlikely in the near future due to lingering inflation. Higher U.S. interest rates attract global investors, strengthening the U.S. dollar and pushing the Australian dollar lower. Second, China's economic rebound is weaker than expected. China is Australia's largest trading partner, especially when it comes to iron ore exports. But Chinese factory output, real estate activity, and consumer confidence have all been underwhelming in recent months. That's lowered demand for Australian exports and weighed on the dollar. And third, the Reserve Bank of Australia is holding back. The Reserve Bank of Australia hasn't raised interest rates since late 2024. With domestic inflation appearing to moderate, the central bank is playing it safe. As a result, Australian interest rates are now lower than those in the US, making the Aussie dollar less attractive to investors. So what does this mean for Australians? Imported goods are now more expensive. Electronics, clothing, cars, and especially fuel all cost more when the dollar is weak. Overseas holidays have also become pricier, as the Aussie dollar buys fewer foreign currencies. For international students, migrants, and families sending money abroad, currency exchange is taking a bigger bite out of their savings. On the flip side, Australian exporters are benefiting. A weaker dollar makes Australian goods cheaper and more competitive overseas, especially in agriculture, mining, and education sectors. Looking ahead, analysts say the Australian dollar is likely to remain in the 64 to 66 US cent range in the short term, unless there's a major shift, such as a surprise US rate cut or a stronger recovery out of China. Some forecasts from major banks like Westpac and ANZ still expect the Australian dollar to rebound later in 2025, possibly climbing back to 67 or even 68 US cents by year-end. But that's far from guaranteed. So what should you do? If you're planning to travel, study overseas, or send money internationally, it's a good idea to monitor exchange rates closely. On the other hand, if you're earning in USD or another strong currency and sending money to Australia, this drop in the Australian dollar could be working in your favor. In the end, the Australian dollar's value doesn't just depend on what's happening here at home. It's shaped by a global tug-of-war between interest rates, trade flows, and international confidence. Thanks for watching. If you found this breakdown helpful, don't forget to like the video and subscribe.